So when we're thinking of rules and the kind of rules that are going to govern our trading, the first thing that we've got to start out with is what's the goal? Right? Like, is the goal to hold for as long as we possibly can and capture the entire move? Do we want to be in and out of these trades? Or what? Do we want to minimize our losses? Do we want to maximize our gains? Well, how much of a drawdown are we willing to take? How much of our profits are we willing to let the market take back to hopefully capture a bigger move? Well, first go through those kinds of questions, because that's going to govern, or that's going to help you create the kind of rules that you want to have, right? So the rules that I've come up with, like, I want to be able to hold for as long as the move is going to go. But I also don't want to sit through, like, giving back most of my hard-fought profits for this thing, right? Like, so there's going to be a little bit of a trade-off, all right? So part of it's going to be that I'm not going to be able to have a giant position and when it finally does hit my ultimate profit target, or if it just continues running to the moon, then I'm not going to have a gigantic position. But I might also be able to add to this later on in later stages, right? Like, so add-on buys is another rule that you might want to have too. But we're talking about selling rules. So for selling, these are the rules that I have, and they can be broken up into 4 different categories. So the first one is the stop loss, right? Like, so you enter the trade starts moving against you. Where are you going to call it quits and just get the hell out of there? Second rule, or second category I should say, is around profit targets, right? Like, how are you going to determine your profit target, and what do you want your reward ratio to be? How much are you going to risk? What's your ultimate reward going to be? Then I use trailing stops, and I also use what I call backstops, where price is moving up for a little bit, it starts chopping around sideways, then it continues. If it chops around sideways and continues, then it built a floor. I don't want it to fall back through that floor, so I will be selling a portion. So let's talk about the stop losses, right? So the rule that I have for my stop loss is that, or for any of these rules, is that when it's hit, I will sell at the amount that whatever I have written down in my trading plan for this particular trade will be done, period. And I'm figuring out both the percentage of my position that I'm going to unload as well as the shares, right? So that way, when the alert goes off, and if it's a type of rule where I need to go in manually and execute based off of this alert, then there's no more thinking involved, right? Like, I'm not calculating, like, oh, how much do I need to sell at this point? No, like, it's already predetermined, it's written out. The only thing that I need to do is just go in and sell, right? So for a stop loss, it's a little bit less of an issue. So for a stop loss, I will see where there's support, and I also like to have there be at least some kind of a moving average, and I want this to be working on multiple time frames as well. Price needs to, like, the support level where the stop loss is, it needs to be firm, right? Like if we're thinking about a floor, right? Like, do we want our floor to be made out of concrete, or do we want our floor to be made out of wet cardboard, right? Like, you want your floor to be nice and sturdy. So the way that I think about that is to have multiple layers of support. So there's price structure. There's price structure on multiple time frames. There's maybe a couple of different moving averages that are also offering support. Maybe there's some trend lines built into there too. Great, we've got multiple things that are supporting this level. But maybe on some of these charts, you can see multiple levels, right? Like, so there's a support floor here, there's another support floor here. You tend to see that in patterns like pennants, like triangles, things like that. There could be certain, like a couple of different levels of support. So for that, I'll use what's called bracketed stops, where part of your position is going to be stopped out here, the other part's going to be here. Generally, I do 50-50, but sometimes it could be 60-40 or 30-70. Figure out what it is, whatever it's going to be, have your reason why, write that out, and then adhere to it. Right, so that's how I'm doing the stop losses. Then the profit targets. So I mentioned reward to risk. So whenever I take any trade, I want it to offer at least a 3-to-1 reward to risk. So when I come up with what I think the profit target should be, and I look at, well, how much am I risking? I want to be risking $1 to make at least $3, right? Like if it's less than that, then I'm moving on. In the stock market, there's so many trades, there's so much opportunity. I think that it's an infinite stream of opportunity. Maybe you heard me say that before, but if it's an infinite stream of opportunity, then why should we settle for anything less, right? Like, so with that criteria, for me, it's pretty strict, 3-to-1 at least. Sometimes it'll be 4-to-1, sometimes it'll be 5-to-1, sometimes it'll be a lot more, but at least 3-to-1. Great, fits that criteria. Then I will start to figure out, okay, how do I want to sell on the way up? And the way that I'll sell on the way up is when I start to have multiples of the amount that I've risked, then I will start to take something off, right? Like, so if it's just a 3-to-1 trade, then I'll start selling a portion once I have 1 times the amount that I've risked. It won't be a lot. It could be anywhere from like 10 or 20% of the position, but it's getting me in the selling mood. I like to sell into strength. The way that I look at all these sell rules is that this is how the market is going to pay me, right? Like we're in this game because we want to make consistent profits. We want to look for ways that the market is going to pay us. And so if something happens and the market wants to pay us, fantastic. I love getting paid. So that's the mindset that I'm going into it with. And if the market's an infinite stream of opportunity, then it's a lot easier to follow those sell rules because the market's paying us. It's an infinite stream. Great, I'm selling this one. Now I can go into the next one. But so I'm selling a bit on the way up, right? And I have that, well, whatever the ultimate profit target is, I've got that one too. It gets there. That doesn't mean that I'm selling everything either, right? Like, so I'm scaling out on the way up. Let's say it gets to that 3-to-1, right? Like, so I've made 3 times the amount that I've risked. Let's say I'm at 50% of the original position. Okay, great. So now it's like, all right, I want to also be able to let some of this thing run for as long as it's going to run, and then sell on weakness, right? Like, so that's where the trailing stops come in and the backstops come in. So for the trailing stop, I'll use a series of moving averages. On my charts, I look at, like on a daily chart, I'm looking at the 5 EMA, the 10 EMA, the 21 EMA, the 50 SMA. I'm looking at the 100 SMA and the 200 SMA. And like, so I'm looking at all these different moving averages, and the ones that I'm going to use, it all depends on the trade. Well, what's been adhered to? Where are we at in the move? And now also predetermine how much I'm going to sell if it breaks and closes below this moving average. Right? Like, so that's why, like, if it's doing it, the alert goes off. I'm not thinking. I'm just following the plan, acting on the plan. And if it's showing weakness, then great. Like, I'm starting to scale out. So it has the dual purpose of getting me out of a trade that isn't working quicker. And it also has the purpose of allowing me to ride a trend, and once that trend starts to change character, then it starts to scale me out of that as well. and then that backstop as it's building those floors. If it falls through the floor, that's a big change in momentum too, and I will start to scale out then as well. So those are the four main types of categories of selling that I do, and some of the rules around it.